Good start other than Lyft. Mixed on the global markets, all doing better. China PMIs, those numbers were very good. And I think that's the most important story of the day. So we saw Shanghai. Shanghai's near a 52-week high, believe it or not. Japan was up. The European numbers were not as good, but generally Europe is also trading to the upside. Here in the United States, risk on, essentially what you want to see moving. If you like risk on, semiconductors stocks up. Industrial stocks doing better. Bank stocks also doing a little better. And defensive REITs and utilities and consumer staples, generally to the downside right now. Want to keep an eye on the old high. You know, 29.30 was the old historic high. That was back, what, at the end of September? We're doing all right. You heard about this mention about the Golden Cross. It doesn't happen very often, so it's worth mentioning. This is where the 50-day crosses the 200-day on the upside on the S&P. So it last happened 3 years ago, and it's only happened 13 times since 1980. I asked our old friends over at Kensho what happens on that, and generally the news is positive. 13 times since 1980 this has happened, and you know, it looks like 12 out of 13 times it's traded to the upside 6 months later. The average gain here, if you put up that full screen, the average gain is 6.7%. If you go on to that next full screen. So generally this kind of trend is an upward trend, positive momentum overall, and again, Kensho seems to like this as well. April, by the way, is a good month. In fact, if you look just at the Dow Jones Industrial Average, it is the best month for the Dow of all of them. It's up an average of 1.9%. It is the third best one for the S&P 500. This is since 1980. December is number 1, November is number 2, and April is number 3. That's for the S&P 500, up 1.4%. You saw what's going on with Lyft, obviously. Just remember something here. It priced at $72. It opened at $86.70 on Friday, and it closed at $78.29. And you see it now at $69. So what you want to look for now is what's coming down the pike. The most immediate thing coming down the pike is TradeWeb. TradeWeb is a well-known electronic trading platform, bonds as well, particularly. So they're going to try to price Wednesday night for trade a Thursday on the NASDAQ. This is not a trivial offer. It's pretty big. It's $600 and some million at the midpoint. That's not as big as Lyft, which was north of $2 billion, but it's still substantial, and we'll see how that trades. Obviously, again, you want to look at what kind of demand there is, and after what's happened with Lyft here, whether that pricing holds or not. Wonderful to see our chairman, Mark Hoffman, ringing the opening bell for Financial Literacy Month. I've talked for many years about the fact that Americans aren't saving enough for retirement. The numbers are very, very difficult to look at. You look at an average, I talk to Vanguard fairly regularly about this. They and Fidelity have a big share of the 401k business in the United States. If you look at what's in Vanguard's accounts, the 65 and over, that's an older person, average investor, for their 401k, $192,000. That sounds like a good amount of money, but remember, that's a 65-year-old that you're talking about. The median, where half have more and half have less, this is a 65-year-old plus, is $58,000. That's a pretty small number. And you take 5% of that reduction, would you want to draw down 5% a year, which is what the average is? That's only $3,000 a year. That's not a lot in the retirement accounts. If you look at everything else, if you look at pensions, only a third of Americans collect pensions now, and the average is about a little less than $10,000 a year. Social Security, the average Social Security check is $1,400 a month. That's $17,000 a year. You add this up for a person that's over 65 and what their retirement's looking like on average, it's about $29,000. Now, if you own your own house and you live in a low-income, a relatively low-tax state, you could survive on $29,000. But that's a stretch. It's not easy to do that. And remember, these are the lucky ones. A lot of people don't have 401ks. A lot of people don't have pensions. Most younger people today don't get them at all. So the point is, you're looking at the lucky ones here. We need to all save a lot more for our retirements. And we'll be talking about all throughout the month. You want more on that? TraderTalk.cnbc.com, and we've got some other stuff, cnbc.com/investinYou. Just take a look at that. We're up 158 points, though. Nice start to the day.